Good morning, traders. I'm Greg McKenna. Welcome to Markets Morning. What a huge night. Sterling really kicked things off yesterday. It roared up close to 2% and back at 130. Remarkable given it traded 126.29. 126.90 just a couple of nights ago. Euro higher too, but only up by about half as much. It's at 114.03. The Aussie and Kiwi fairly roared. We've got the Aussie at 72 cents thereabouts, Kiwi at 66.5. Aussie trying to break out of that downtrend from the highs around 81 cents earlier this year. If it can close sort of 72, sort of 10, 20, 30, it would be a good close. And it, might be on its way to 74 cents or something like that if this US dollar is going to have a bit of a weakness. Now, of course, we've got non-farm payrolls tonight. And, if wages were up the way that the ISM manufacturing report last night suggested that they may be, then there's every chance that the US dollar doesn't keep falling, that it finds some support. But what we did see last night, why stocks were higher, the S&P's up 1 and a bit percent at 27.40. The Nasdaq's up 1.5, although that might be threatened by Apple's results in the fall after the bell. The Russell's up 2.2. Is that President Trump, and I think that he's got his eye on the stock market running up to the midterms, but President Trump tweeted that he'd been on the phone to President Xi and that they'd had a really good talk. Now, of course, that goosed stocks, but what it did was it also hit the US dollar. Now, the reason I think it hit the US dollar is because at the moment, the bastion of strength, not counting Australian GDP, but the bastion of strength is the US economy. The central bank that is raising rates is the Fed. And so if you get a relaxation of trade tensions, if the Chinese economy can start to lift with all the stimulus that's coming down the pipe, if all the other economies in Asia, and look at those market PMIs for manufacturing yesterday in Asia, they were pretty poor. If that can lift, then other countries can start to do well. If that malaise, that trade tension can lift, the one that the German industry keeps talking about, then maybe Germany can lift as well. Now, I'm not convinced either that the trade tensions are going to end quickly, or that these other parts of the world are going to pick up. But you can see how the linkage goes between that thinking and the US dollar sell-off. Now, of course, it could have just been, the hangover of month-end squaring and SOMA, as I suggested it might have been yesterday. And this is why, I want to make this point really strongly, and then I'll just move on to the charts. This is why I always respect ranges and levels and trend lines unless or until they broke. Remember what I said yesterday. We still haven't broken 112.80. That just means to me we're in a 113, 118.50 range for euro. Anyway, we're going to start with euro today. We'll do currencies, then we'll do commodities, then we'll come back to stocks and finish up with Bitcoin. Anyway, euro. 114.25.30 is the key here. Remember, it was the support on the way down. It's now offering resistance on the way up. If you have a look at it, so if I was going to put this in a big box, just to give you a sense of this range I'm talking about. Let's, what do we do here? What do we do? Shapes, right? I'll just give you an example. This is going to look awful, but let's just kind of go like that, right? So that's your box, right? 113, 118.50 roughly. I'll get rid of that by the time we next do this. But that also helps me show this 114.30 a little bit better. Support, and then a break, now resistance. In the very, very short term, 114.30 is the delineation line between this being a pause before we go down through 112.80 or this being a reinforcement of that 112.80, 113 bottom of the range, and euro is about to head higher. Now, if you have a look at my charts and you know how I use MACDs, you can see I got a buy signal. I got a buy signal in Aussie yesterday too, but 114.30, that's the level I'll be watching. That's the level it needs to get above, close at least 1 4-hour above it, preferably a day, or not, as may be the case. I'm neither bullish or bearish. A range is a range. You got to play the range. Anyway, you know that, so I'm not going to bang on about that. Dollar yen. Where's my dollar yen? Bitcoin sitting on top of dollar yen. Very strange that. Anyway, so I thought dollar yen was going to go higher earlier this week. because the equity rally was going to continue to push the yen. But as you can see here, what I didn't do was I didn't respect what I always say was, unless it gets through the 61.8, there's no point talking about getting back to the full round trip, the 100%. I kind of mentioned that the other day, but I'm not going to claim it. I did have an order to buy at 112.80, but I cancelled that because it became apparent it looked like it was rolling over. I don't really have much to say on that one. It's getting confused. We'll just respect that range, and we'll see how that one goes. Not playing that one. Sterling. Gee whiz, wacky-do. What did I say yesterday? I said it could get to the fast-moving average, and it's gone through there, 130. You can see what's important now, 130.65. These Brexit stories, there's nothing new. I know I said that. The Dominic Raab story, 21st, confirmed by the Irish Foreign Minister, who also said, heck, they've still got a lot of work to do. Theresa May keeps going, it's just conjecture and all this kind of stuff. The story last night about financial deal being done, or a deal about financial services companies being done. Theresa May's spokesman again says it's just conjecture and all that kind of stuff. And the EU side of things say, we're not there yet. So this is prone to headline risk now. We're getting really into the pointy end of it. If you can trade options, now's the time. 6-month straddle, a little bit out of the money, so you don't have to pay a fortune for it. But my sense is there's 6 to 9 big figures in this, one way or the other. A break of 126.60 gets you 126. A break of, a positive resolution gets you 137, maybe higher, maybe even the 140s. That could be the way to play it. Playing the spot with all this headline risk might be a bit more difficult going on, particularly when you can get a 3 big figure move in such a short space of time. But that level 130.65 is the one to watch. In terms of the battler rallied. That's the weekly chart. I'm going to start with the 4-hour. Yesterday on Twitter, I put out a piece saying if 71.20 breaks, could run to 70.50, 55.65. If that breaks, could run to 72, sort of 40.60, something like that. I was long for that run. I've squared up this morning. I've squared up this morning for a couple of reasons. One is retail sales today. I've got no idea where retail sales will be, but they could be weak, so I'll get out. I squared up today because on the 4 hours, which was the basis of that trade, the one that I put out on Twitter, it's extended. Now, of course, retail sales might come out at 0.6 and we'll go to that 72, 40, 60, whatever it was that I thought. But prudence and all that kind of stuff seems to me to be the right way to play it, because when you look at it on a daily, it's just straight up. And you know what I think about vertical moves. Now, that vertical move could be followed by another vertical move. The key thing here, though, is that chart there. If we finish above 71.50, 71.70, whatever you want to call it, we will have had our first week, although the old trend line used to be down here until we all moved it to there. So I don't want to get, this is one of the reasons why, I think Peter Brandt hates trend lines. Horizontal trend line, sloping trend lines, because they get moved all the time. And he's dead right on that. The key, though, and the reason I keep using trend lines, and I talk about them all the time, is other people are looking at them. That's the key. If we close above 71.50, 71.70, if the Aussie can, then that might change the narrative. For me, you're seeing this round of... You would have seen in my narrative about the Aussie, the kind of everything's baked into the cake, all the bad news there, just need the US dollar to lift its foot off. That's what we saw last night. That's where we saw the rally. Obviously, $3 billion trade surplus was a stonkingly good number for Australia yesterday, and that ignited it. Sterling was running. But the fact that Aussie managed to map with Sterling, 1.88% gain as at 7 o'clock this morning, is indicative that a lot of bad news is baked in and this market is short. So what I've said this morning is that there is a chance that we are in for a garden variety retracement to 74.40 or 74 figure 40. I think I've said that earlier this week, that I said it when speaking to Leanne Jones unconsciously. So just like this video is unscripted and I take great note of what I say, so too that comment struck me. Right, so we've got an uptrend, but we've got a reversal. This is really interesting. So some of the Elliott Wave guys that I follow and seem to be pretty good I reckon the US dollar is actually going to have a weak spot now. Now's the time for the US dollar weakness before it eventually surges again. If that's the case, then we will get an indication that that is happening because we will see dollar CAD break back down through 135. Now, if we look at this on a weekly, it's going to be you can't see it. But basically, it's going to be a pretty ugly reversal. When I sit down to do my weekly scan over the weekend, that is going to look like a pretty poor and false break on the weeklies, which would then generally signal a move sort of back into the 129 lows. It's got to break first. Interesting time, isn't it? You can see there's a lot of sort of turgid moves. Kiwi dollar. Nice, big, fat bounce for the Kiwi. So it's broken that. I had a little wedgie thing drawn in for the Kiwi there. Pardon me. So a good run there. And I commented on Twitter yesterday as well about the chance of a break and where it would run to. It's basically there. Where to next? Well, you know, this is the resistance over here. This 66.95, this 67 region. I've talked about that before. If we look at it on a weekly, you know, this is the same sort of look as the Aussie. Look at this. It's trying to form a bottom. Doesn't mean it can't go back and retest, but it's trying to form a bottom in the same way that 70 seems to be solid support for the Aussie. So on that basis, you know, you've got your castle here and you've fallen off the parapet and all that kind of stuff. You know, 67, I would expect 67 to be really solid resistance. If Kiwi was to close above 67, I would be wondering how far it's going to go. But at the moment, both the Aussie and Kiwi, strangely, stupidly, I know, but that's what the charts say, they do look like they might be moving. Now, gold, got this completely wrong. So the correlation between gold and stocks is, you know, about 0.88, as I talked about yesterday, except for last night. Because stocks are up and gold roared. Gold was up 1 point something percent. And back at 12.34. This is really positive for gold. Now, it emerged last night via Bloomberg when I was doing my research this morning that the central banks have been back on the bid and they've been buying gold. Now, that's what that price action looks like. A weaker US dollar and gold surges. So, you know, that's pretty positive for gold. Now, most folks are looking for gold to go lower, that I know. And there is nothing in this that says it cannot, because we still have not got through the 1252 to 1260 region, which is the resistance I look at on my weeklies. But last night was really interesting in the context of gold and the structure of where gold is going. So keep an eye on that. Silver, my goodness. What a week. You know, just look at that. The last sort of 4 days. You know, collapse, do nothing, collapse, surge. I don't know what to say about silver, other than if 15 breaks, it gets really bullish. So that's probably the key for me at the moment for silver traders. Copper rose 2.3, 2.4% last night. Now, why did copper rise? Well, naturally, copper's going to benefit. If you think about the two assets that most, or the best, resonated with traders to represent their fear of the trade war, it was copper and the Aussie dollar. So it's natural that if people are, and I don't necessarily think it's the right, but if people are going to say, hey, these trade tensions aren't going to be as bad as we thought, he says, stepping back, flapping his hands, then you've got to lift a weight off copper and you've got to lift a weight off the Aussie, don't you? So that's why copper's up. Copper's up at, you know, back at 272. Hardly anything deep going on. And it's worth noting, as I've mentioned in Markets Morning this morning, it's worth noting that Jeff Sessions has just pinged a China state-owned semiconductor company for stealing secrets. So, you know, this trade battle is about soybeans and aluminium and steel and all that sort of stuff. But it's also about intellectual property. So it'd be interesting to see what President Xi can or will do about intellectual property. Anyway, 14 and a half minutes, I'll get my skates on. Oil's getting there, getting closer. We've had a breakout now in Brent. News last night, OPEC's increased again, or Bloomberg said the increase is bigger than the Reuters increase the night before. We've broken that trend line. Look at that on a weekly basis. That is a big move. You know, it looks to me $70. And maybe on a long-term basis, we need to start thinking about 64 for Brent. Just saying. WTI, same sort of story. If you shrink it down, you look at the weeklies. You're looking, for me, that's $60. That's where it's headed. Any reversals, as long as they hold below sort of 67.5, I would still have a target of $60 for WTI. In terms of stocks, and I'm going to get the skates on really quickly, what we saw in the S&P is really important. If we can close up above 2734, then we will know that this thing has got legs. As it stands, we've broken the trend line, tick. As it stands, the MACD are compressing, or it's rising, so the moving averages are coming closer together, tick. All right, Apple has obviously knocked it down a little bit. 2734 on the futures will, if we can close above there on the week, we can have another good week next week. Obviously, it's primaries, but you can see here, look, support, support, and then resistance now. So that's the level to watch. Just quickly on the NASDAQ, similar kind of story. We're still trying to get up and through. Same sort of story here. If you can close above 7023, remembering this is the NASDAQ 100 futures-based CFD, you can close above sort of 7023 or thereabouts, and certainly above last night's high, which was 70.78. So let's say if we can close above 70.78 on the week, things will look okay. There's a question of time frames here. Medium term, I still think we retest the lows and maybe even go lower, but short term, things are pointing positively. In terms of the local market, the Aussie underperformance, we're in a range here. So I'm going to call it 56.78 to 58.79. Break either side and you get the run. Theoretically, this should go too, but that MACD's changes pretty quickly at 57.68. The banks under pressure. Miners should do better today. We'll just have to wait and see. DAX, our friend the DAX. Gary Gap has been filled, as I discussed yesterday. Still below 38.2. So 11.5 and 11.7. The 38 and 50 are really important. 11.7 in particular on a weekly basis is really important for the DAX. You could draw a trend line there, as you could just see. Last but not least, where did I put that Bitcoin chart? Doing nothing, going nowhere, not really interested. Lots of hype about it. Tom Lee said he's still excited about 20 or 25,000, but I'll leave it at that. Non-farm payrolls tonight. Market's looking for 190, 3.7% and 3.1% wages. That 3.1% is the one to watch. The ISM last night showed wages rising but jobs down. So we could get a confusing number today. So really watch that. Before that, we get retail sales in Australia. That's going to be pretty big. And we need to have a look at that. Retail sales in Australia expected to be 0.3%. We also get the quarterly data too, which will feed into GDP. So that's important too. There was something else. Canadian data's out tonight too, so keep an eye on that. Governor Pollers and his deputy Wilkins have been pretty hawkish. Watch for any Brexit news. This is a volatile time for the pound. 130.65 short-term resistance, medium-term resistance. Anyway, have a look. Gold's got to break 12.50 to really kick on. Otherwise, that's resistance. Lots and lots and lots. I could talk for hours. Anyway, have a great day. Good luck with non-farms tonight. Remember, in volatile times, it's always best to scale your positions to the volatility. That way, you won't blow your account up. Anyway, or you've got a less chance of blowing your account up. Anyway, usual disclaimers suffice on this. Not advice and all that kind of stuff. Have a great day. Bye for now.